Hey everyone, happy Thursday, July 10th. It's a little bit before 9 a.m. on the West Coast, and it's time for another market update. Well, it was a really light week on data. It just worked out that the way the different reports, not many are were released this week. So it's mainly going to be about some of the narrative stuff. And to be honest, a lot of that's been driving things, the global stuff, tariff stuff. So first thing, last week, the big beautiful bill passed finally. The only reason I bring that up is anything to do with spending and debt ceiling and all that can have effect on the markets. Obviously, we don't want more spending. We want less spending. That's less inflation, better for mortgage rates, and so forth. So that did pass. So there's some budget estimates that say that will add to our deficit, and then there's people that say it won't. So it'll be interesting to see what happens there. Next thing, so tariffs. Tariffs back in the headlines this last week. There's a new deadline that got moved to August 1st. And then there's also been some new tariffs over the last few days. I know some letters went out. Probably the biggest one, as far as trade partners on that list of like the 14 that have got that letter, probably be South Korea and Japan. And then yesterday, I know there was some talk of new 50% tariffs on Brazil. So right now, any article you see about the markets and stuff is markets on edge about tariffs and tariffs. So it's still a big subject. We really haven't seen a huge amount of increase in inflation, but we also know a lot of companies kind of bought up front once they knew tariffs were coming. Before tariffs set in, they bought a bunch of inventory, so that way they had it all stocked up, and so maybe they haven't been buying at those higher prices yet, which they would then pass on to us as the consumer. So still a big deal. We'll have to keep an eye on that. I think the biggest part about it is no one knows what's going to happen. It's keeping the markets from being sure about anything. So every day is a little volatile. So, like I said, we'll have to keep an eye on what happens there. Next thing, yesterday we got the Fed minutes from their previous meeting, which I believe was June 18th. And what it showed at that time, June 18th, it was kind of divided. There was multiple, I think, Waller, Bowman, Goolsby. It seemed like we're on board to cut, coming up here in July, where there was others that were talking about not cutting the rest of the year. So it's pretty divided. But that was before last week's BLS jobs report, which came in stronger than expected, and unemployment went down and all that. So maybe that would have changed some of the thinking, but at least at that time, it was kind of trending in the right direction where it was starting to get a little divided. More people were jumping on the let's cut, bandwagon. But, right now for this upcoming, this is, what this graph shows is the meeting after the upcoming meeting, but the July 18th meeting right now, about a 7% chance that they'll cut and a 93% chance that they'll stay where they're at. So that jobs report probably sealed the deal there. If that jobs report came in really weak, like the ADP, then maybe they would have cut in July. But right now, that looks like it's off the table, barring some sort of crazy stuff happening the next week. But this is for the September 30th meeting. Oh, I'm sorry, September 17th meeting. And right now, at least, the markets are showing a 64% chance that they'll cut, a little bit. 31.6% chance that they won't cut at all. They'll do what they keep doing and pausing. And there's actually a 4.4% chance that they think they may cut, half a point, which would be amazing. I don't think that would happen, but it's good to see. This seems like it's our best chance when the Fed might, cut their rates right now. At least that's what the markets are thinking, is more likely than not they will cut their rate in September. So fingers crossed, and again, if the data starts coming in our favor, jobs reports and inflation, jobs are down, inflation is down, then that could lead to maybe the half point cut, or just solidifying that they'll cut at least a quarter of a point. So good to see that they're divided, but again, it was before that jobs report. Initial jobless claims. So this has been dropping a little bit. It was estimated at 236, came in at 227. They started getting the 240s. And again, this is important. Shows the more people filing for unemployment, the weaker the job market looks. The weaker the job market looks, the more likely it is the Fed would cut rates. But keep in mind, this was the July 4th week. So that's, people maybe not spending time to file for unemployment. They're out spending time with family and friends. And then also continuing claims jumped again. I think it's at 1.975 million. That means, people are having a longer and longer on unemployment. So basically that shows weakness in the job market, because people, once they do get laid off, are not able to find new jobs. All right, next thing. So where does that leave us? Last week we were about 6.8 after that jobs report. Right now we're 6.79. So it's been pretty flat. There, again, not a lot of data this week. It's been a lot of just tariff talk and stuff like that. But next week we get the CPI report. So the markets are kind of looking at that. That's the first look at inflation for the month of June. If that shows a bunch of tariff hits and it jumps, then that's gonna definitely hurt us. If it shows that, again, a pretty benign, moderate number for inflation and not too much tariff stuff, then that maybe we'll see a little rally. And then, like I said, Fed's coming up on July 30th. Is their next meeting right now? Again, 5, 6, 7% chance that they'll cut. So, like I said, pretty quiet week. Gotta hope that not more any drama on the tariff front or global wars and stuff, and then hope the data starts coming in our favor. But if anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great week, everybody.